The Hedgeless Horseman here. It's September 26th, 2023. Another day with people increasingly losing their minds. And it's like I've been saying, you can't take this sector seriously right now because it's, first of all, 90% plus of people are trend followers. So they're going to be more inclined to sell the longer a trend has lasted, and the more powerful it is. So we're creating more sellers simply by the virtue of the bear trend not having stopped yet. And then we have the tax loss selling season is coming up. We most certainly have redemptions by fund, meaning that investors, maybe because they need to pay their increasingly higher mortgage rates, or inflation, or they've lost their jobs, whatever, or they get scared and like trend followers, they sell. So they ask these precious metals funds for to take out their money. So the funds have to, not that they want to, they have to sell something to raise funds. So they will sell whatever they can sell, not because they want to, not because they think it's a good idea, simply because they have to. That's what I think is behind some juniors over just the last week having gone down 50%. On no news, and metal prices haven't really gone anywhere and stuff like that, and most of them were already cheap to begin with. So again, nothing to do with fundamentals. It's just how people behave and the market mechanisms. How funds have to operate. That's why I do not envy running a precious metal mining fund. Because it's got to be frustrating to know that you should just be buying hand over fist at times like this, and still people are going to do what people always do, sell low. And you're forced to sell, which can crash some stock prices, which makes the performance look even worse, which might make even more people to sell, etc., etc., all the way down to the absolute low whenever and at whatever price that is. And a few people who bought that will make a ton of money. But that's how it is. But that wasn't the main topic of discussion. The main topic of discussion today was going to be the trade-off between ifs and whens. Because what I mean by that is that, yes, in a sour market, in a bear trend, it's the if cases, the alpha cases, that can outperform and actually go up. Meaning, when you take exploration risk as a risk, and you get favorable returns, or favorable answers to the questions asked by the drill bit, you might outperform. One obvious case would be Snowline. This was a if question. They did not start off with a resource. They only started off with a few drill holes that looked good. And it was a good case, I think, for why the Valley discovery could be a substantial discovery. And yes, today we know it's a substantial discovery, probably one of the best in, quite a few years. That was not a guarantee. There, a possible scenario. That's what I what I mean by, I don't take losses or gains personally, not on a case by case basis at least. Did I know Snowline was gonna, did I know for sure Valley was gonna turn out to be the Valley we know today? No. In that case, I would, probably have gone in 100%. Do I know that I even, was it right to buy Snowline? I only see the results, and I can't judge based on the results only. That's again like going all in with a crappy hand in poker, and if you win, you think it was a good idea to go all in. No, we don't know. In poker, you at least have a sense of what the actual odds are. It's like if you have aces, you know you're the favorite against any hand, and you know you're a big favorite. In investing, there's millions of possibilities what could happen, and there's external factors. There's shocks. There might be a terrorist attack. There might be an asteroid impact. There might be an oil embargo. There's just too many unknowns that we don't know about. So all we can do is have a good theory. That comes before everything. We have to have an idea what we think our hand is worth, or what it will be worth, what the odds of it being worth what we hope it will be worth is, etc. And then, compare it to the price we're paying today. That's for the if stores, the exploration stores. The dangers now with the sector getting increasingly cheaper. I mean, now Bear Creek Mining, my favorite proxy, is basically, it's not yet down to the lows of late 2022, but not far off, okay? And that goes with the whole sector overall. We've seen exploration plays go down, intact stories, exploration plays going down. We've seen, advanced explorers go down, where you kind of know that they have something already, still they go down. And we have the beta plays going down as well, or the one with banked success. So everything gets taken to the woodshed. And the thing is, of course, that yes, if you are heavy in alpha plays, meaning that, hey, we don't really know if they have a deposit or if they have gold or whatever. If we have a few discoveries along the way, even in a major bear trend, you can have these outliers that do very well, and they might actually, save your portfolio, or at least, blunt the price damage of a major bear trend. It's like, in my opinion, if your portfolio is down 50% right now, that is absolutely nothing. Most people think that's the catastrophe. My portfolio is down 54% here, I think, probably around 50% here, 50% here. I don't know what it's actually down right now, because I have, a few different portfolios, and I have my largest holding is in a private company, so it's like, I don't know. I think that's worth a lot more than, the last private placement level. So I don't know, but it's like, hey, let's say it's down 50%. That has never been a problem. 50% has been a cakewalk to get back. You can just look here, 463% in a few months. 650% in 8 months, 2000% in, let's say 2-3 years. If you were down 50% in around either of these bottoms, of course you would have made a lot of money within a year or so. If you're down 70%, you would have made money. So it's like people freaking out that they're down 50%. It's like, oh, I would be, if you were down 80%, that might be a problem. But the thing is, depending on how much, money you have invested. If you have a small portfolio and are down, 80%, if you buy some shares down here and just, lower your average, so you're just down maybe 70 or 60%, then it's going to be a cakewalk. It's, if you have, 10 million invested, it's down 80%, and you have, a $2,000 salary. Yeah, it's going to be hard to, immediately claw that back. But over the longer time frame, obviously you could be down, 90%, and you would still, be up after this bull was over. But I guess that it's like, to calm people, or, the point is that heavy losses is not that big of a deal, because this is one of the most volatile sectors around, and this sector can go up hundreds of percent in just 2 months when the bull gets going. So people who think that their lives are over because they are down 50% or even more, I mean, they haven't seen what this sector can do in a bull. But that's no excuse to be just lazy and like, I'm not going to do any due diligence. I'm not going to actually look at the news out there because all I see is like, regardless of what the news is, the companies, they don't do anything. They don't go up. They might go down. I mean, like I've said before, some companies out there put out news that might be worth 50 or 100% of their market caps, and they don't move. I mean, in addition to what they were worth before. So when you have volatility like this, when you have some juniors go down 50% on no news and the story is intact, for example, that's a huge widening of the price to value gap. Not because value went up, it's just price went down. So it's like, you can, if you did nothing, didn't even look at the news, just thought that, hey, I'm gonna own whatever I own. If I'm down 50% on these, it's like, I don't want to do anything, any due diligence. I don't care anymore. I'm just gonna wait for, the sector to go up. I mean, that might work, of course, but it's like, imagine how different your portfolio will look like if you actually, it's like, okay, yeah, I'm down 50% in this stock, sure, and it doesn't feel good to convert that to a loss. But if you can buy if you have something that's down 50% and you think, hey, the upside is 200% here. If you sell that for something that might have put out good news, whatever, and you think, hey, the upside in that one is 300%. If you just value shuffle, nothing happens at face value at the time. Like I said in the last video, you sell something for maybe $2,000, buy something else. The portfolio value doesn't change. But assuming you're right on average in your estimations about the changing opportunities out there, you might get another extra 100% to your future portfolio. And imagine that 100% to the next, let's say, sentiment high. Over the long term, that switch here, if it grants you 100% extra to the next sentiment high, I mean, 10 years from now, that value shuffling down here might, have given you, 500% extra on that $2,000. And, imagine 20 years from now, and just the compounding effects. It's like nothing has more impact than what you do at extreme lows. Because everything can go down 100%. But upside is open-ended. So there's a lot of buys out there, and with different risk profiles. But some buys are way, in my opinion, bigger buys than other stocks. Some might be, you can easily see like 200-300%. But that's it. Some actually have probable growth as well. So you think that, hey, they have 200-300% just based on what they have. But I think there's a fair shot that they actually will increase the value by exploration or whatever. So, but if you have that banked success already, margin of safety. So you think based on what they already have, you think that's going to go up to 300%. Then and exploration upside becomes a bonus. So maybe they do end up finding something more. So you have a probable 200-300% with an option on 200-300% more or whatever. That's a big difference than something that just has a fixed 200-300% because they can't grow any more or it's a very crappy project or whatever. Huge implications over the long term. But anyway, now I'm getting off track again. The point I was going to make is that, yes, we've seen Snowline, for example, and just to have one decent position in one of these can help blunt a bear trend like this by quite a bit. Let's say you have a 5% position in Snowline, it goes up X, that could have paid for a bunch of 1% positions, whatever, that got cut in half. The thing is, I mean, I'm not against, if it's a good alpha play, it's a good alpha play, regardless if sentiment is here or here. But with banked success and the sentiment swing alone, I mean the beta play of this sector, because there's alpha when you take exploration risk, and then there's beta just waiting for the next sentiment swing. The cheaper this gets, the cheaper bank success gets, the higher the opportunity cost for exploration plays. Because there's a flip side to, let's say, only being in alpha plays and just hoping for the next snowline goal, whatever. Imagine you have 20 very high risk early stage exploration companies. That's all you have, because you taught yourself that, hey, only snowline alone basically bailed me out or paid for the other ones. I mean, that's good and all. Problem is that if you're a bit unlucky, whatever, and none of the cases actually pan out, or more importantly, the stories gets worse before the sector trend gets going. Let's say you have, I talked about Aston Bay before. I wrote this up, on average maybe 100% return. That was, a nice addition. I explained why. And okay, it looks like, and I took, I think, profits around on average around maybe 20 cents. And for a while there, it shot higher. It shot up 50% more. So I felt stupid there for a while. But I knew my game plan. It's like, this might become something or might not become something. But it's like, I think I'm going to have an easy, just, let's say, hype move here, which I was open about. And I sold out, and it felt bad when it kept going. Now it's down here. And we have, people like, this is why I don't do explorers, only cash flowing companies. This is, of course, just an anecdote. And in my opinion, this is one of those cases that you can't just make a, in my opinion, blanket statement. Yes, you have an example of a early stage exploration swing for the fences, very high risk, high reward story. What looks to not be panning out right now. But that's, I was going to say akin to like, well, I put all my money, I was going to say pure gold or a cash flowing company, and let's say something happens, and you can't just, the lesson can't be that, well, I'm never going to touch those again, or someone buys a crappy junior and they lose money and say, well, I'm not going to buy juniors anymore. I understand that this guy, for example, he seems to be very good at mapping out cash flowing companies and all that, but it's like, that's within his circle of confidence. So I don't mind that he sticks to what he knows, but it's like, what I'm saying is you can't just take one anecdote and then it's like, yeah, this is why I never touch this stuff, because we only saw what happened. It looks like Aston Bay might not be onto a new Kamoa-Kakula, but nobody knew that. I certainly did not short Aston Bay because I didn't know what the future was going to look like. I can't take credit now. It's like, yeah, all you dumb people who was in this stocks. Like, how many do you think actually shorted Aston Bay? I don't think that's many. And that's why I do not personally like Schadenfreude, for example. I can have my suspicions of something, but nobody can guarantee. And in case everyone is so certain of everything, they should be shorting every single one of these cases that they can. But people don't tend to do that because people are not that sure about things. But it's easy given this is a high risk, high reward sector, and if there was even a 10% chance that they would be on the next Kamoa-Kakula, maybe this was a stellar bet even up here. But there's still a 90% chance of failure. But it could theoretically still be a buy if one believed there was a 10% chance. So it can both be a good buy up here and still you have a bad outcome. But the thing is that if you have 20 Aston Bays or 10 Aston Bays and you think that the chance of success was 10%, in that case one on average should have made a Kamoa-Kakula discovery and would have eventually paid for the 9 others that failed. That comes from poker. But I'm getting off topic again, I guess. my original point of this video was that, well, to just explain that, yes, we have cases that work out and don't work out. The thing is that, given that everything is going down, the biggest layup right now is actually to be part of the next sentiment swing. Meaning that if you just find a company that does nothing, has ounces in the ground, they don't even try to create any value. They have, let's say, 1-2 million ounces in the ground. Management knows that, hey, there's no point in spending any money, so we're gonna, lower the cost. If they just survive until the next upturn, you're gonna make probably, a multi-bagger in those companies. And you don't take any if risk. You don't ask any questions with the drill bit and risk negative responses. So this is from these levels, it's beta that's the easy money. The ones that will be around and won't dilute you to hell and, of course, not go bankrupt. So that's the opportunity cost of betting on exploration stories. Because it's not ideal if we're in only alpha exploration plays and try to, again, make the bear trend easier by having, a success here and there. Because if we're only trying to prevent the pain of the bear market, we might take too much if risk, exploration risk. So in a worst case scenario, most or all of our stories might not pan out exploration wise. For example, let's say you have one snowline gold and 19 others fail or 9 other fails. Yes, you will have done well, and snowline will probably in a good sentiment environment do better, but still, now I think it's actually much the lowest risk way to play this sector. I think it's just to buy cheap beta now that hopefully the companies aren't doing too much, yada yada yada. I find it too boring personally to just sit on a deposit and know the company won't do anything. I prefer hybrid plays where you have both beta and alpha. But again, this should bottom any day. I'm not saying this might go on for years more. Who knows? But what I am saying is that we do not want to end up that we have a turn. The bull market kicks off, and most, or if not all, of our exploration stories, they have already killed their projects just in time for the next sentiment swing. Because if a story has gone south like this, apparently has, things might change, but right now the sentiment is not that this is a winning horse, that they're onto something, let's say. So even if the market bottom today, tomorrow, yes, Aston Bay would probably go up a bit or whatever, but there's nothing like an intact story where you have ounces in the ground, because that has a lot more reason to go up. Or best case scenarios actually is that you have an intact growth story and you ride that. If this takes 2 to 3 years, let's say you have an intact growth story that just adds ounces for 2-3 years, that would be ideal, obviously. But it would not be fun to only be in exploration plays hoping for more snow lines to bail you out and limit the brunt of the fall, because we already had the brunt of the fall. Up here, I would say alpha plays is probably the only way to really make any money, because if you're in Bear Creek mining or whatever, that's going to go down 80%. Anything that's mature, where management can't really create much value, that's going to be down 80%. So you need value creation to blunt the value of the ounces in the ground going down and value of any ounces discovered going down. Now the value, the ounces in the ground is so cheap that we don't really need to bet too much on finding ounces. But if we've seen people who've been along for Snowline and seen that, these are the only stories that work right now. High octane, high impact exploration stories. So that's what I'm only going to bet for. I think people might in that case be kind of shooting themselves in the foot because they are not even making sure that they will be on board for the very low hanging fruit or the most obvious opportunity right now, which is simply the sentiment swing. Because if you have 0 ounces in the ground and we have a sentiment change, yes, if it's a new story it might be hot, but if you have a bunch of failed stories, let's say you don't want to have a lot of exploration stories failing right now, you kind of take a permanent loss. Because those stories or that money could be invested in very cheap beta plays right now, where you know if they just survive you're gonna get a multi-bagger. But an alpha case actually has to perform, because if it gets killed when we're down here, there's no reason really for that to go up later with the market, because that project or the target or whatever, that's already dead. I hope you get what I'm saying here. And like always, I mean, theory is all we have to go by. We have to make the most sensible actions or non-actions right now based on an unknowable future, but we can have kind of a sense. I mean, theorycraft, what are the future scenarios? And again, we can't take one good story or one bad story or outcome, I should say, and just assume that, well, it was dumb to buy this and good to buy this. No, that's just outcome dependence. That's looking in hindsight, seeing what happened, and then just assume. Because how is that going to help you? Just because we made money on Snowline, does that automatically mean that we know the next Snowline? Of course not. So everything is based on theory. We just have to theorycraft and make the best possible decision we can with the information we have based on an unknowable future, but a skewed future, meaning that yes, we know the next big leg up or the next big move is going to be up, even though this sector can still go down 50% more than before it goes up. So we can still have I mean, take here for example. I mean, let's say we say that this is similar to here. This was a false rally. Okay, people thought the bull is on because, let's see here, from the bottom to here. Okay, only 60% still. Okay, still a pretty good rally. Bam, down even further, more disappointments, yada, yada, yada. And we can see we're closing in on that time frame as well. This bottom, well, I guess it's finally bottom early January, but we're nearing at least year end, tax loss selling season, yada, yada. So it would make sense that you have this unsustainably cheap sector. We're going to tax loss selling season. It would make sense that something that should already go up might not go up just yet because there might be tax loss selling season. But when that is over, this sector might be the cheapest it's been in 40-50 years, or at least since 2002, that would mark, let's say the end of the bear market. And in that case we might have, I mean, if this is akin to this, maybe we'll actually go down and break this, but this is when people are really going to throw in the towel. I mean, Jesus Christ, imagine if this level breaks here, then it's like people are going to say the sector is finished forever, and that's probably going to be the best buy you'll see maybe in 8 years at least. And in that case, even if you're down 70%, that's probably not going to be a problem. Anyway, so yeah, I guess just a finger of caution I'm lifting here, that we have to understand where we are, and this is the past. This has nothing to do with the future really, except where it took us. So alpha has actually been decreasing in value, kinda, even though, hey, I'm all for alpha plays, because yes, it feels good that some play, if this continues for a year and you have a company that actually makes a discovery and proves up, yada yada, that one such story might actually let's say make it a lot easier. I mean, if one 5% position goes up 100-200%, I mean, imagine getting that extra free money to be able to invest in beta plays that are still down here or even lower. I mean, That's possible, and you'll be creating a lot of future money, despite the fact that most of your portfolio might be down. But still, so on that note, I was going to say, I mean, I just talked to a new company, Nevgold, very interesting. I think it's actually, one of the better hybrid stories I've found recently. I haven't been had time to do a super amount of due diligence, but basically they have two quite advanced exploration stories, and this is the Nutmeg Mountain deposit, around 1.3 million ounces at 0.6 to 0.48 grams per ton, which sounds low, but this is probably gonna be, if it becomes a mine, open pit heap leach mine. And you can even see that, I mean, if you increase the cutoff grade by quite a bit, I mean to 0.6 for example, I mean that you won't mine any ounces below 0.6 grams per ton. You still have an average universal resource of over 600,000 ounces of 0.9 grams per ton AU equivalent, which would be or not even equivalent, pure AU, which would be very high for an open pit heap leach operation. You can see, I mean, the highest grades pretty much start at surface as well. So even in a small scale mining scenario, I think this could be very economic. They want to increase it to they think they can increase it to like 2.5 million ounces, maybe more. But this is a case where it's like, yes, they have a resource, and most of it is in the indicated resource. If the gold bull gets going, gold price goes higher, this is gonna revalue. And they have the enough targets that this could grow for quite some time as well. On depth, at depth, along strike, parallel zones as well. It's a low sulfidation epithermal deposits, and that's quite hot in the US right now. They have a lot of patented claims. Most of this or deposit is actually on patented claims. Then they had the Limousine Butte project, which is close to Ridgeline, JV here with Freeport, or earning by Freeport. Here you have Centerra Gold earning in Nevada. Plenty of exploration upside. This actually made the stock pop to 80 cents not too long ago, but as the market keeled over, they couldn't really, withstand the sector selling. And this is oxide, near surface, etc. So they think this could also become, for obvious reasons, 1.5 million ounces, maybe more, and 2 kilometer strike length open to the southwest. Here it gets deeper. So they basically have two projects, which might be oxide, near surface, open pit in the US. I think the market cap is 20 million. They need money soon. Inside ownership 30%. So this I think would be a pretty good hodl story, because it's cheap enough that that okay, if they only have 1.5 million ounces in the US, that's going to be revalued by quite a bit, and they even have two projects, and one is in Nevada. So is this going to turn into, is either project going to turn into a tier 1 asset? No, I don't think so. Tier 2, probably not, but it's like two good deposits that a mid-tier would have. Yeah, I would think so. Caliber Mining and Orla has been buying, so it's like, am I talking, blue sky billions of dollars? Probably not, but from 20 million market cap right now, even if you add dilution, hey, if this, when the sector gets going, let's say you get up here, it's like, I think $200 million wouldn't be a stretch at all. So that would be a probable multi-bagger, and that's not really assuming that blue sky goes really well, or that they actually, do separate deals on either of the assets or whatever. But it's like, high insider ownership, two technically low risk deposits near surface, open pitable, heap leachable, kind of the lowest capex type projects you could find in the US. I mean, that's good. That this one has, I think, both beta, the when question. You're gonna make money when, assuming there's still gonna be around, which I think, because again, 30% insider ownership, etc. They're gonna, by hook or by crook, they're gonna be around. So I think this has probable upside, just based on the low-hanging fruit, which is the big sentiment swing, and they have alpha potential that they might be able to at least grow these by 50% or maybe 100%, etc. So again, if they have some exploration success more, let's say they get up to 3 million ounces or whatever, it's like in a high sentiment environment, might get, I don't know, $60-80 per ounce. I mean, that's like 240 million Canadian, and they have a market cap of 20. I mean, you get the picture. Would I be surprised to make money in Nevgold if I held it until this sector gets going into a bull again? Absolutely not. So that's a nice story, I think. Aztec Minerals is actually, I mean, it's quite similar, I would say. Also one of these hybrid cases where they already have, something that might, probably be able to get mined. Insiders 15%, that's good. They have the Tombstone project and the Cervantes project. That's in Mexico, and this is in, I think that's what, is that in Arizona? Anyway, a lot of low-hanging fruit, probable upside. I talked to this company up at Beaver Creek. I mean, you can go through it yourselves. But yeah, this is one also. It's like, yeah, I'm not expecting a tier 2, tier 1 billion dollar takeover or anything like that, but I think the market cap is around 20 million. So it's like, hey, at 100, 200 million, that would still be a, multi-bagger from these levels, assuming not, hundreds of percent dilution, for example. And with insiders owning that much, I think they're going to be smart about it. Oh yeah, it's actually in Arizona, Tombstone. Past producing mine as well. Yeah, I mean, obviously infrastructure is superb and all of that. So I think these are, quite similar. That okay, you're not asking for a miracle here. You're not asking them to find the next 5 to 10 million ounce deposit, but they probably have, each of the companies might have 1 to 2 pretty decent mines that for sure could be worth a lot more than they're priced at right now. And with the insider ownership, they're going to be worrying more about the stock than you do. None of these companies are sponsors, not yet at least, but I would be happy for any of them to come on as a sponsor, just so you know. Yeah, these are two. I own actually a bit of this already. Nevgold is yeah, basically I got it pitched today. But immediately it's like the easiest thing to do. Just look at the price. Almost everything that is decent right now is cheap. The question is not to find a buy. The question is, what are the best buys? Would I be happy if I buy a cheap junior? It goes up to 300% when we get here, of course. Would I be happier if I friggin' high graded my portfolio and like really did the work to find the ones that probably are gonna go up 400 to 500%? Of course, that's gonna have huge implications. But one thing I will not do is to be out of this sector when it's this cheap and risk missing the inevitable move higher. Now, this is the biggest layup in this sector probably since, I don't know, especially given that gold is at 1900, not to 1100 like it was down here. Yeah, inflation is up or whatever, but this sector right now is way cheaper at face value than it even was in the 2015 bear market, because at this point there was almost no gold miner out there that made any money. The gold sector was worthless at face value. Now it's not worthless. The bigger miners, they're actually, I mean, some of them are paying dividends. They're actually, producing cash flow. So a good gold mine or a decent gold mine today is probably making money, even with the inflation going up. So this sector has no business reflecting that the sector is worthless or almost worthless. And, excuse me, I'm gonna sneeze. Oh, excuse me. Or B, that this sector will be worthless, over the next 5 to 10 years. I simply don't buy that. So it's, and I mean, I've shown mathematically with like Inflection Resources, for example, that mathematically this sector is, that Mr. Market is mathematically retarded. Aztec is 20 million. Alamos Gold is in as well. So I mean, okay. Are you smarter than Alamos Gold? It's not that it's a guaranteed win, but it's like, hey, you have third party validation from a mid tier. You have the CEO coming in with 90,000 more, a lot of skin in the game, etc. I mean, it's just, it's like throwing darts out there right now. Then another one I actually been thinking a bit about. Eloro Resources, because I remember there was a similar case. I mean, we know the total. I've talked about Eloro before, since the MRE, the maiden resource. They came out with a huge resource, absolutely huge, 1.2 billion ounces AG equivalent, and the global grade was very low. Okay, Bolivia is a low-cost mining jurisdiction, so if that would work today, the global grade, I don't know, maybe I think it would be marginal. Let's put it like that. Let's assume they wouldn't actually make any money today on the global resource. They still had 132 million. At 0.11 zinc, 0.5 lead, 24.38. That I think they would make money on today, because that's not too far off from what San Cristobal is mining today. But my point is that there was a company which I owned back in, I don't remember when this was. 2016, I guess. I did this. This is my early sketchings when I just tried to. I mean, I knew little or nothing about miners, and I, as you can see, was almost only in or looking at beta plays. It's like producers, advanced, or developers, or at least advanced explorers. I mean, we have some that actually, Endeavor, I think, were they taken over, or they took over some? I don't remember. Mines Management got acquired. Arizona Mining got acquired for 1 point whatever billion dollars. Unfortunately, I didn't hold it the whole way, and that would be the alpha play, I guess. Anyway, so there was a company called Eloro Resources, and at the time this was had a market cap of 21 million. I think it actually went below that, and I bought some of that, or I owned it for a while, because that had a huge low grade silver resource in Mexico. Well, Eloro got acquired by Discovery Metals. Discovery Metals and Eloro Resources entered into arrangement agreement. And I'm pretty sure it was Taj Singh, which now has come on with Gold Line Resources. He took over this company, Discovery Silver. So he was CEO for a while. So they have the Cordero, and you can still, I mean, today projects Cordero. So has been the flagship project, which was valued at 21 million in 2016. Well, they did work on it, led by Taj Singh, And they started to focus, if I remember correctly, I haven't followed the story that well, but it's like, if I remember correctly, they started, you know, let's say going away from the, we just have a absolutely huge resource. I think it was like 1 billion ounces AG equivalent or something like that, maybe more. So kind of like, in an Eloro situation. But they started to focus more on the high grade hits or the high grade zones. Let's see if we can find some maybe. 202. I mean, that's akin what, some stuff of the higher grade at Eloro drills. Well, this was very high grade, very slim but very high grade. I mean, point being is that Eloro, and Quinten talked about this, that the reason why the global resource was so low grade was the lack of drilling. Basically, I think the average drill intercept had higher grade, quite a bit higher grade than the global resource. So the point is, and here you have the higher grade resource. You can kind of see. I mean the sparsely drilled, I was gonna say. So I mean, I assume what Eloro is gonna do is not trying. I think they wanted to shock the market with extreme beta, meaning that we're gonna drill until we have an absolutely huge resource, and that didn't play out too well given the market reaction. But just like Levon Resources and later Discovery Silver, I think they will focus on proving up more of the higher grade core. And Levon went from, with the Cordero project, went from 21 million. Today, even in this crappy market, the market cap is 280. Same project. Already started out with a huge low grade resource. But they obviously have increased the quality of that project. Market cap is, up multiples, more than 10x from the lows of 2016. That's why I have said before, and I'll say it again, this is the maiden resource for Eloro. This is not or for Izquierda. This is not the final version of Izquierda. I have no doubt they're gonna would be able to increase the high grade core, which I think, those grades should work in Bolivia today. And of course, right now, like Levon was back then, this is right now a huge beta play, kinda, because they still have 1.2 billion ounces AG equivalent. So if the bull market started tomorrow, and in 2 years we would see silver at, let's say, $35, gold at whatever, zinc and lead up, tin up, let's say. I think Eloro could be a multi-bagger from here. But still, so you have that in the kind of back pocket. You have, you have a huge low grade resource, which the market, right now isn't caring too much about, like they didn't care about Levon Resources. But when the silver market kicked off in 2006, I don't remember what Levon actually was valued at the time. How much it ran. I think it went up a few multiples. But even from 21 million, I'm not sure it actually reached the market cap of Eloro. But my point being is that there's a huge system at Izquierda, just like Cordero is a huge system in Mexico, and there is stuff you can do, because that enormity of a system with this given how sparsely drilled this is. And the fact that the average drill hole is quite a bit better than the global resource, Iska is better than it looks. I mean, if you would know the exact grade, I mean, assuming that you would literally 100% drill coverage, or that you mine this, I think this would be quite a bit higher grade than the MRE is suggesting. So what does that mean? I think Eloro, I mean, I think Iska is going to get better. I think it's a huge beta play right now, and I think that it's going to take time to prove up more high grade. And of course, I mean, then, you know, maybe the market will have to wait for the next resource update or whatever. I don't know what path they're gonna, you know, take, or if they're gonna drill more discoveries. I mean, like the high grade tin hits, and that, you know, what was it, like 1.2 kilometers away or something. So I don't know exactly what they're gonna do. I'm just saying that this is not the I don't think this is the final version of Iska. And right now you have, you know, huge leverage to metals. But is it, you know, necessarily an absolutely slam dunk? I mean, that depends. I mean, if I knew the sector would be, the silver price would be bottoming tomorrow, I would be piling into all the high beta plays I knew about, because they're gonna, I mean, if let's say, I mean, if we have a sector rally that's this quick, that might be too quick for most of the good exploration plays to actually really prove up that much value. I mean, this was to June. I mean, let's say we have a bottom soon in the sector. I mean, some of the northern explorers, they might have drill start around late June. So imagine it's like quiet period, obviously can't even prove up more ounces because they can't drill. I mean, we'll have an assay period going into maybe year end at least. Still, I mean, the beta plays might be up multiples where they, you know, even the intact high quality growth stories, the if questions, might not really have been able, they haven't had enough time to prove that they have a lot more, let's say. But we don't know that. So again, everything is, we can just, all we can do is make the best possible decisions we can given the information we got. So I'm not against, I mean, Eloro is in my HODL portfolio, or HODL portfolios I should say, because I think it's going to get better. I think it has huge beta. But yes, as I've said before, I was disappointed with the total, with the global grade. So I don't think, yes, prices have went down, and I have no doubt that when we go into a bull, I think Eloro will be trading a lot higher than where it is right now. But I don't know when the bull will start. So in the meantime, it's kind of a high, very high beta play. And I think there's alpha to be had, because like Eloro Resources, I think the resource quality can get a lot better with time and more drilling and more money, of course. Then we have, I was just going to go through this. Okay, so here we have the Gamblore portfolio. This portfolio not too long ago, August 4th. I mean, that's not, yeah, okay, it's like almost 2 months now. Up 45%. Now it's up 7%. How do you explain that? I mean, that's not a small change. That's a large change. Well, it's hard. Headwater is down. Store's gotten a lot better. Tectonic is up a bit. Can't say the store's gotten a lot better, but they're going to start drilling soon. Inflection Resources, waiting for more information. Brixton Metals put out at least one big hole out of Camp Creek. Still waiting for all the assays from Trapper. And I think maybe a few more holes from Camp Creek, but I don't actually remember. I'm going to be talking to them soon. I'm waiting for Quinton to talk more about the Brixton Metals Camp Creek hits. I mean, yeah, the porphyry is deep, and it appears that it's actually plunging down. So it's like, I'm not a block caving expert, so I would want to hear more about the context of those hits. Fathom Nickel, that has crashed. Well, it's up since whenever I did this. But still, I think it's down like 40% in 2 days or something. No news, just down. Goliath Resources obviously gotten a lot better with abundant visible gold. Up, 49%. But like, if this was 2016, this would probably easily be over 200 million already. So this is I'm not going to say a pure if play, because it looks so pretty obvious that Shorebet and Bonanza, what's it called? Is it the Bonanza zone? That it's going to be, a few million ounces at least. And the Golden Gate feeder zone might be a game changer. So it's like, they don't have a resource, but like you kind of know that they have a resource, inferred, or not on paper inferred, but so they have kind of inherent beta, or will have sooner or later. Condor Resources still waiting for drilling. That has been, swinging big time. I think it was down to 21 cents like yesterday or something. Again, you can't really explain all these moves rationally. Altamira, just cheap. Put out, that their target, intrusion target has been growing. Good. Western Alaska, another head scratcher, kind of like Fathom, just down 48%. Funny thing is, they closed a private placement at exactly, I think, $206 per share. And that closed 11 days ago, or 12 days ago. It's been cut in half. On what news? No news. So were the ones participating in the placement, were they that wrong? No, I think that's somebody just selling. I briefly met Western Alaska up at Beaver Creek. It's like, I haven't heard anything that would all of a sudden have that project go to shit. Dynasty Gold put out some news. I haven't actually dug into that story too much. But it, hang around, let's say. Gold 79 haven't done much. I think they need money soon. Pacific Ridge put out some news, and there's a lot more assets to come. Juggernaut, good visuals, but hasn't gone anywhere. Rakla Metals up a bit. I mean, they put out visuals recently, and it's like looked encouraging. SK Mining still waiting. Cartier Silver, that got absolutely hammered. I think it was up at 80 cents, and I think it went down to maybe sub 30 even. I think that was fallout from Eloro, kinda. Oh, well, they also put out a hole. That was actually, I mean, for our first hole, it was good, but when the sentiment was as bad as it was in the wake of Eloro, and in this sector environment, sentiment environment, wasn't enough at the time to really do much except to create a liquidity selling event. For gold, I think they're still waiting for, well, they're probably doing work right now. District Metals, uranium has been on fire apparently. We're still waiting for the moratorium to take, hopefully be lifted. Canadian Maverick, I think they're doing boots on the ground stuff right now. Not much change. Alpha Exploration, I think they've reined in I think they're, let's say, being conservative, playing it safe right now, because Africa in this environment, they're gonna need to hit something exceptional to have anyone care right now. The takeaway is that this sector has gone from plus 45 to plus 7%, without much happening, I would say. Probably actually a net add in value, but it's just swinging as hell. That's why you can't take this sector seriously. There is no way that some of these projects went up or down 40% in value within a week on no news. Nothing happened. That's sentiment, forced selling, panic sellers, fund redemptions, all of that. So now we're in cuckoo land, I was gonna say. That was the gist of today's video, and that's why it's like you have to detach from sentiment. That's why, mostly nowadays, I post memes and stuff like that, because it's like there's nothing else to do than prepare as best we can for the next inevitable upturn. Just do the due diligence, and if we have some juniors out there going up or down 20% in a day, 40% in a week, or whatever, you might be, get depressed and it's like, oh, what's the point, whatever. The opportunities change enormously. Just, an example. Let's say we have, just an example. Let's say from this level here, one would expect company X to actually do like 600%. That goes down a bit, not too much. That's up to 655 already. Go down here, that's another 100%. And then you mix in the fact that some of these companies actually have good news. So even if let's say price doesn't change, but the value goes up to, now I'm being a bit hyperbolic, but that's to prove a point, 849%. And people think, well, the price didn't move, so nothing changed. The opportunity might have gone up a huge amount. And maybe it actually created a liquidity event, so people sold into the good news. In that case, that case might have added 350% in expected future return in, let's say, one day, one news release day. Positive news, lower share price because it was a liquidity event. The broader market averages 8 to 9% per year. This would be, a decade at least worth of added extra future returns. Just from one day of some forced selling, a liquidity event going into good news. This is not the time to be lazy. This is where fortunes are made. Because the swings right now and the way that good news gets non-rewarded, let's say, has huge implications for when this market is hot again. And we've seen it. Uranium. Everybody complained about uranium. It's like, probably I think, not too long ago, somebody said, that's followed the space, like, this is as depressed as it's ever been. Well, lo and behold, recently uranium is rocking. And the people who stuck it out in that sector when it was shit, got worse, became extremely shit, believed in their thesis, let's say they averaged down, they probably are in the green right now. Because commodity sectors are cyclical. Now we're in the shitter. One day we're gonna be out in the sunlight. And the trick is to make as much as we can to have the highest possible swing. The lower we are from the next top, etc., the more we're gonna make. You get all this, but like most people don't. Most people have no idea. They look at the current environment as evidence why you can't make money in this sector. They look at this and say you can't make money in this sector. Why? Because it's been going down for 2 years. Yeah, well, the thing is this market never goes down forever. So the very fact that we're down here and what's going to happen some point in the future is also the reason why you can make money in this sector. Who cares where we've been? We care where we're going, and especially where we will be relative to where we are now. So this is, again, people who say the current sentiment and the valuations out there is why you can't make money in the sector, they have no idea. They're probably never going to make any money in miners. Because they don't understand. They don't even understand why it's called a cyclical sector. I'm not saying it's going to be easy. I'm not saying it's going to turn around tomorrow. I'm not saying we're not going to go down 50% more. We might go down, who knows, down here before it turns around. But this is going to turn around one day, and we're going to have a bull market one day. And when that day comes, which might be months or years from now, the buys or the seeds that were sown down here are gonna lead to big trees. Yeah. So consider me biased. Assume my own shares of all companies mentioned. Assume everyone is a sponsor, even though they're not. I don't share your profits or your losses. Only invest money you don't need. I actually I have to sell some shares to pay taxes, which sucks because obviously it's like if there's any time I would want to have that money to buy, would be now. But hey, nothing is perfect. I thought we would have bottomed already personally, and I'm a greedy little piglet. Don't invest money you cannot afford to lose. This is this is still the risk capital. The actual safe money, that's in actual gold and silver and all of that. That's the actual safe. That's the hedge to even your gold and silver portfolio. But yeah, I think about what I said about the fact that the cheaper this sector gets, actually, it's the beta plays, the margin of safety, the bank success. The opportunity cost goes up if you're in alpha place, because this is like, if you have a lot of birds in the hand, and a bird in the hand is valued at $20 per ounce, probably lower than that, and we know we're going to get to $80 per bird in the hand. This is the low-hanging fruit. This is the probable upside. And if we only risk it on stories that have no birds in the hand, and we bet on them having birds in the bush, those can work very well if the story is intact to the next high, etc. But it would be a kind of a nightmare if we were only in birds in the bush place. All of those, let's say, stories, they kind of went south, and then you have, shortly after the sector takes off and you're sitting there, it's like, well, this is not gonna go up with the rest because they just kind of killed their story, let's say. Then it's gonna be a problem because you're gonna have to take a permanent loss because maybe that project is dead, and you're gonna have to chase something else. Whereas if bird in the hand play went down like this, assuming Bear Creek mining is around, it goes down 50% from here. That's gonna come back because they still have all the ounces in the ground. Whereas, maybe a exploration story, they went out, tried to find ounces, didn't find ounces, so there's nothing to revalue really. Yeah, anyway, this rant has been long enough. Take care. This is psychological warfare right now. This sector has nothing to do with fundamentals right now. It's all about willpower, staying power, and sticking to your guns. Bye.